Good morning, and welcome to the Hedge Trade Daily Risk Brief for May 19, 2026. Global equities remain in a broadly constructive phase, with major U.S. indices continuing their strong multi-year uptrends. However, short-term momentum indicators suggest markets are entering a period of consolidation or shallow pullbacks rather than a major reversal. Volatility remains moderate, with the VIX near 18, reflecting balanced risk sentiment without signs of systemic stress. The S&P 500 continues trading near all-time highs around 7,367, supported by strong long-term trend confirmation across multiple timeframes. Short-term momentum, however, is beginning to show fatigue, with mixed daily signals pointing toward near-term consolidation. Key support levels are between 7,300 and 7,350, while resistance remains between 7,400 and 7,450. At current levels, there is no immediate high-conviction entry opportunity, and the preferred approach remains to wait for either a pullback into support or a confirmed breakout above resistance before increasing exposure. The Nasdaq 100 also remains in a strong uptrend while approaching resistance near 29,100. Momentum indicators suggest overbought conditions and fading upside momentum, which argues for patience in the near term. Pullback entries near the 28,500 support zone appear more attractive from a risk-reward perspective. The Russell 2000, trading near 2,750, continues to track broader equity trends but remains more sensitive to economic shifts and broader market sentiment. Volatility conditions remain stable overall, with no indication of a meaningful transition toward a risk-off environment. While there are some short-term momentum divergences across equities, these currently appear consistent with consolidation rather than the beginning of a larger correction. From a portfolio positioning perspective, equities continue to be favored in alignment with dominant long-term uptrends, but caution is advised against chasing extended prices near resistance. Tactical positioning continues to favor selective entries on pullbacks or confirmed breakouts. Alternative assets such as gold and Bitcoin remain elevated and continue to act as tactical diversifiers during periods of equity consolidation. Currency markets also remain important to monitor, particularly USD to JPY, near 159, reflecting ongoing yen weakness that may impact multinational earnings and broader market volatility. Looking ahead, a daily close below 7,300 on the S&P 500 would challenge the current bullish structure and could trigger a deeper retracement, while a confirmed breakout above 7,400 would strengthen the bullish continuation case. For the Nasdaq 100, failure to hold 28,500 support would increase the probability of a broader short-term correction. Overall, the broader market structure remains bullish, but short-term momentum conditions continue to support patience, disciplined entries, and careful risk management as markets consolidate near key resistance levels